Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. It's Friday. Can you believe it's Friday? I don't actually 100% believe it. Well, guess what? The Treasury is open here just now, and they're going. They're taking off. They're taking off. You see that? I don't. You know what? I need to fix this light. Hold on. What's the deal with the light here? A child probably touched it. Oh, wait, that means probably need to... Yeah, no, it's fine. Anyways, to the charts. Okay, so, Treasuries here, past 2 days, down. But here this morning, having a bit of a recovery. Quite an aggressive recovery, I might add. So, I feel like that these levels are appropriate. I don't necessarily expect to see a strong trending right now. Probably more likely two-way action. And it is a little bit two-way this morning. So S&P 500 also didn't really go anywhere. Really choppy. So we're basically same context generally that we had Thursday. Here, oil a little bit down though. Natural gas. Oh, they pulled back a little bit yesterday, but... Natural gas. I mean, we want natural gas down, right? So that's good. Gold and silver holding their gains. That's kind of the biggest one. I think that the story of the week has been gold and silver here, man. So, and then Kappa may be threatening to come out here today. And then we come over to debit coins. Man, this comeback is just really freaky, and now they're actually fading down again. What? Now, I think that maybe some of the reaction here has been Evergrande, but can't be quite sure. But I do see Bitcoin people talking about Evergrande. And here's the dollar above 95. Can you believe it? Wow. Dollar is just strong right now. That's a pretty strong move for the dollar, probably having knockoff effects all across currency world, right? So we got everything set up. Yep. People have been touching screens. I can tell. I see your fingerprints, children. That baby didn't make that. He can't reach there. All right, so here the Treasury. Look at this. They just reaching for more. Well, probably could have participated if I wasn't such a lazy, but no, I took way too long to get ready this morning. That's been happening a lot lately, hasn't it? Well, yep, it did take off there after the open, though. It was a little bit of a quiet open, and then it just took off. Well, I mean, all the way up to wow, we're like really far down below 131. It's a little crazy when you actually look at it. That means that they could probably try and claw their way back quite a bit here. So we shall see. I feel like this light is too bright. What's going on here? Do I just need to turn it down well below 20? Oh, it's set to 30. Okay. That's better. All right, blow my nose. I wonder here. 20 half. 20 half having back and forth action across it. 21 not really doing anything all that interesting. See, a little bit pulls, like 300 pulls, which is about normal. The 5-year is back a little bit. So are we getting some steepening? We are. We should come back over here. So you see this here on this chart? Right, on this move, we got a good amount of steepening, we got a good amount of flattening, and now the curve is steepening really hard here. Is this a new? Well, it backed off there. They came off of it. Is this a new trade, or is this somebody? Because it's a steepener, you know, it could be somebody that had the flattener on and they're taking profits and going into the weekend. It's with the way that it's trading, it's not 100% clear to me that that is a spread trade that's driving it, but it's very possible given how much it moved. I don't know, guys. It's pretty sparse on this stream here, which I'm not surprised because yesterday was a holiday and today is Friday. But the treasuries right now seem to be suggesting that we're going to get a lot of action today. Kind of looks like they're going to get a lot of action today. Let's come back and read some Twitters. Wait, what? If you worry about the bad decisions you've made, you are only going to keep making bad decisions. While obvious in theory, we all suffer from this, says Brannigan Bear. Okay, but what's the solution to that one? Rivian set to seek U.S. site for electro vehicle battery facility. Dude, the all this stuff over Rivian is a little crazy. That one's a little crazy, man. They're like, it was a company that's made like $1 million and it's already valued at $100 billion. What? The Hill news story: inflation spike gives ammunition to Manchin. Yeah. I really don't think that Build Back Better bill is going to happen. We're getting icebergs both sides of 2020 half now in the 10-year. Okay, buyers win out. That's a much stronger bid there at 20 half. Let's see if they get them to nibble at 21. This is reflattening now here. That's the 30-year is the one that's driving the first one. Why is News Squawk tweeting? Oh, it's coffee. I thought they said kofefi because it was. Oh yeah, because it was a Donald Trump. That's funny. Might have an opportunity to steal a tick here. Maybe. Actually, no, I don't like what the 5-year is doing there. We're a good 3 basis points down on the day, in fact, because yesterday we were like at 1.6 on the 10-year, right? Oh, okay. So my news squawk is reminding me that ECB's Lane will be speaking in about 10 minutes. Bank of England's Haskell at the top of the hour. But mostly it's a pretty sparse schedule today up until 10 o'clock Eastern time with the Michigan consumer sentiment numbers. Still kind of more of the same. They're having a hard time getting them to clear 21, and they're just kind of forming a hole at 20 half. I think that probably eventually they'll clear it, but it's probably going to take some work. You see the range there in the 10-year? That's like, look at the range in the price here from 16 to 21. So that's like an 8 to 10 tick range. But then it's only an 8 to 10 tick range over here in the micros. What's with that? Okay, now that was a big hit into 21. The limit orders all took fills, but they ate into it enough that I think that we can probably tick up here, right? In fact, I'll hit into it. Do a sim trade here. Yeah, that's good stacking there. So we're kind of turning it. It's turning into a little bit of mucky action. Like we've got really good trend, we've got really good market orders coming through, right? But the limit orders aren't pulling away per se, right? So it's there's lots of icebergs in here. This can be kind of a tricky market because you might, you get those markets where it just kind of bubbles up and it always seems like it's going to turn there and it never does. It just bubbles up. We're kind of getting that, but the velocity of it is higher than normal. Like it's a really active market at the same time. And it does appear to me, at least, to be largely treasury driven. Like I'm not seeing anything significant on. Well, let's come and look at the dollar. Yeah, I'm not really seeing like a huge move in the dollar or in the Japanese yen or anything like that. Gold is maybe turning down a little bit as which is interesting. Did get my fill there on that little one ticker. Scoop. CNN is going back to a 100% news channel. A good number of the talent / staff will be let go to align to that new mission. Zavid Zaslav vows to be very hands-on and in LA based in running Warner Brothers Discovery. Explain that one to me. There's what is it that CNN doesn't is they don't consider news? Because I'm not sure I trust CNN on what is news and what is not news. You know what I mean? How come I have two ZN futures columns? That's weird. I think one of those columns used to be something else, but I don't know what it was. Okay, well, I mean, they still look like they're on a pretty good trend here, but the pace has slowed a little bit. That was again the 10-year and the 30-year went to new highs, but the 5-year was back a little bit. So it flattened back out a little bit. Okay, 5-year, taking a little step there. You might have an opportunity here, 21.5, 22, but when you look at that one, that's a lot of volume ahead of you if you want to get filled at 22, right? But the way it's ticking kind of suggests that you might get it. Phil, good morning. How are you? Phil, you're the first one to say anything today. It's, because we had a holiday yesterday. I think the stream's a little off today, but probably will still pick up when the S&P 500 gets going, right? Okay, so did they just hit into it and I missed it? Because I'm just noticing that there's about 5K had traded there. So did they hit into it and just hit into an iceberg? Phil says he's doing not too bad. Well, okay, down tick at 21.5. So now I'm thinking if I wanted to take the reverse of this wouldn't be a terrible spot, but I don't necessarily have anything today telling me that it should be a really aggressive move one way or another. In fact, I think that this aggressive move that we've had up in the treasuries is probably some mean reversion. Mean reversion in spread trades. If I start to see some heavy volume come into the 5-year, then that might be the trade. Well, it's a little bit too late. They're already 2 ticks up, huh? Lisa Abramowitz. Some traders are betting against the recent sell-off in long-term rates, pouring the greatest amount of money yesterday into BlackRock's long-term treasury ETF in more than a year. The micro treasury yields are doing something a little interesting here at 1.565 now. Somebody did decide to reverse it with a 20 lot. You see nobody's willing to offer there at 565. Maybe if they start taking 22. Okay. So then now they did, but it was only for a split second, right? Okay, that's a little better. And the 22 pulled a little bit. So the 5 year is still kind of where it is. It's actually interesting. The 10-year was the one leading the charge on that one, which has me a little. I'm not quite sure why convexity would matter here. So it could just be traders. The Wall Street Journal. What does the metaverse look like? Joanna Stern checked into a hotel and strapped on a virtual reality headset for a day. She went to work, meetings, hung out with new avatar friends, and attended virtual shows. Why would I go? Listen, this makes no sense. Why would I go into the metaverse to do things that I do in real life? Why? Makes no sense, guys. Go to your work. Well, I don't know. Like the advantage of working remote is that I don't have to be, have like a physical presence. Why are you trying to ruin it? Stan Lee died 3 years ago today. Has it really been that long? Wow, what? That lies an iceberg 21.5. This has been a very icebergy market, though. And they recover it. And the 5 year is now come back up. Biden's New York Post says Biden's Build Back Better will hike taxes on 30% of middle class families. Yeah, I really don't think that his bill is going to happen. Okay, the 5 year did step up there for a second, but it backed off. Now all three of them seem to be a little less sure. I'm still kind of eyeing this down here. It seems like it might be an okay spot, but I don't know if the timing and everything really makes a lot of sense. maybe looking a little better. The 30 year has come back. So are we steepening it up again? Is that what's going on here? So we're going to steepen up another notch? I mean, you can see the volume going off there in the 5 year. Like the 30 year, kind of having trouble with 30 now. But these two both looking like they're going to tick up. Okay, Biden and Xi will hold a virtual summit on Monday. What? Rudy Gobert, Donovan Mitchell, and Joe Ingles were all ejected with 4 minutes left in Utah Jazz's first home loss of the season. How did that happen? With fouls or what? Oh, Turner, who I guess is another. Turner shoved Gobert in the back and missed a layup. Gobert responded by bear hugging him and trying to wrestle Turner to the floor. The two players had to be separated near the Jazz bench. Hmm. Okay, now they're definitely down a step, right? At 6.565 was an okay spot, but I don't know if I would necessarily get my 5.75. Like it could be that's as far back as they go, and then they lift back up to highs, right? In fact, we might want to be looking at like selling 5.7. I don't know. The way that the 30 year moved there. Because right now, I'm not necessarily like the timing and everything seems a little bit wrong for like another major move, right? So this would probably more likely be like trailing off. And that was a good 40 minutes of buying action that we had. The only issue is I suspect that the inflation expectations in the consumer sentiment numbers are not necessarily going to be a good number for the Treasury. Well, I mean, good number if you, yeah, the Treasuries will go down. Good number of your buying rates, but let's see here. When was this? Vice President Harris, inflation is a big problem. We take it very seriously. It seems like the administration, like, had a real turnaround when those CPI numbers came out, right? Like, they were out talking about it and trying to get in front of it, like, not ignoring it anymore for sure. See, they're iceberging at 20.5 too. I mean, that was that was a spot. Remember that it was like 20 half, and then we had the little like new highs. So for us to be coming back to 20 half, we should expect there to be a little bit of. In fact, I will put one out there just for the hell of it. We should expect to see some people trying to catch it there, right? Now, it may fall through and reverse, but I don't know. I'm not sure I necessarily see any reason for things today to change. This still kind of looks to me like just the activity died off. Maybe waiting for another leg of the meta order. Hey, NASDAQ trader, how you doing? And with that, spreads seem to have normalized a little bit. Let's make money. We'll see. Right now, while the S&P 500 is looking good there, I hadn't been paying attention, but it's been on a decent uptrend. That was something there. I saw across all of the markets, including the ES that time, but I can't quite put a finger on what it was that happened. I kind of caught it out of the corner of my eye. Oh, you know what? I still haven't turned him back on. Yeah, when I had to rebuild my workspace, he didn't get added back in. But the problem is, like, Jay is okay. I really want to take him to the next step and implement some machine learning, and I've been having some trouble getting that whole thing going. I just really haven't had the time to like really sit down and tackle that problem. But I really want to add him into TensorFlow. Well, yeah. So what the problem is that I want to use TensorFlow, which because NinjaTrader 8 uses .NET 4.5. Maybe I should look at that another time and just verify on that. But the versions of frameworks that I want to use for that are not compatible with NinjaTrader. So in order to use it, you basically have to export the data outside of NinjaTrader and do the analysis somewhere else. So it basically involves making something in NinjaTrader that will send the data over using RPC calls to like a Python application, and then doing all of the machine learning in Python. And so that's the thing that I haven't figured out how to do. And last time I started doing it, I was like, oh, seems like maybe you can do it. But then I realized you can't do it from within the NinjaTrader 8 editor. You're going to have to use like the third-party approach, because Visual Studio does some stuff like generate some files and stuff on its own when you use that library. And that's kind of where I left it, and I was out of time at that point. Is everybody sleeping today, asks Lucas. I think so, man. It was a very, very quiet start of the stream today. Which, you know, given that yesterday was a holiday and all of that, I'm sure that there's a lot of people, you know. My understanding is people who program machine learning come from hard sciences like physics and pure math. Well, yeah, to some extent. I think that machine learning is kind of like its own branch in computer science that a person can very much specialize in. Try MT5. No thanks. Really, the best solution here would be that they get off of .NET 4.5, right? Russia sends warplanes over Belarus amid border dispute. I mean, it's going to be a tough battle at 22 still, but they look like they're gearing up for it, and this is around the time where we could see another meta order buying, right? So nobody's gonna fill that. Iceberg at 21 half A. See, like they'll get, yeah, but can they get through the order at 22? I think that they probably have enough volume, but it's not going to be easy, right? And then you got more at 22 half and 23. But like I said, this is kind of looking like that really difficult, mucky kind of bubble up market where it seems like it has every reason to stop there, but it never does. Oh, that's weird. Kind of looks like 6J overall go in the right direction for us, so It's kind of feeling a little tense to me. Do you remember someone by the names of James Bond? Maybe vaguely. Maybe vaguely. That actually, yeah, that does kind of sound a little familiar. Okay, so by the way, they took out the 22 pretty aggressively there, huh? They're ticking up. Yeah. Some backwash coming in and just being completely absorbed. Well, it would have been nice if I had gotten the 5-7, right? But there was no fill on that one. When I took my trade here, there was one lot on it, and I hit into him. I said, sure, I'll hit into that. That seems like it would be a really foolish spot to try and take a fade trade, don't you think? Who was that? You find out who that was. You had a one lot offer, or sorry, one lot bid at one spot 562, and you took that. Were you exiting a position? I mean, like if they were exiting a position, that would maybe make sense, but getting into one, then maybe we should have a talk. Well, things sure look different now, right? Remember I was saying, well, 22, they're iceberging, and then there's a decent amount at 23, and how are they going to get through that? How do they get through that? But it's just that kind of market where it's just like, it seems like the trend keeps going, even though the order flow kind of will keep giving you signs that maybe it's going to stop. Yeah, oh yeah. I've been trying to, all of the trades I've been doing on the micros have been basically been live orders. I mean, come on, it's like $1. Why not? But I've been doing okay with it. I really, even though I've like, generally speaking, all of my trades in micros have been really good. Like my win rate in particular has been really good. My win rate and the ability to get them to run has been really good. But I have made big mistakes too. So, but I feel like trading micros has I've gotten a lot better from doing it. I think I still have some issues with like I don't feel it so much now, but when I was thinking about getting in and maybe I should have done it at like 565 for instance, like I was feeling my heart was starting to race a little bit, you know. I probably should have just hit into it or like way earlier than I did. And maybe that was a little bit of emotions, you know, hampering me there. And part of me thinks, well, you just got to keep doing it until you become like desensitized to it, but I'm not so sure that you ever will. Right? You just got to get better at making the decisions when it's like that. By the way, as we did that, the S&P 500 was moving up pretty good. No, that's not what I want. Okay, they're gonna bury me here, yeah. It's like as soon as I said something, they just said, "Oh, I guess we better reverse, huh?" I actually like that spot right there. On the Biden inflation crisis, Vice President Harris says the Build Back Better bill was specifically designed to reverse inflation. Oh my gosh, are you for freaking real, man? Like, how's that like? They really think that anybody's gonna believe them when they start saying that kind of crap? No, that was not the intention of the bill at all. You just wanted to spend money. Ugh. You were about to do 175 in TN. What, before we dropped there a little bit? So that one that we just had actually kind of looks like a hole to me. Like there was a pretty big meta order buying through that location, and I think that they got filled. Like I think that they got filled, and so it fell back into the hole that they had created. I guess Biden is speaking at the moment. By the way, I should note that it really still looks like the 10-year is kind of trying to lead this rally, which is really interesting to me. When I say a meta order, I mean an order that's a large order that can't be executed all at once. So it's one large trade where they split it up and execute it over time. So I think that somebody just bought something like 10,000, maybe 15,000 contracts in 10 years. And then when they got filled, the market fell back into the hole that they had created. Because there was basically a lot of transactions here in 22, 21 half. How do you know those from separate orders? Well, so in that case, the reason I think that it was a meta order was because of the way that they took out the offer. They just completely ate through the offer. And then when it ticked up, there would be orders hitting back the other way, and the iceberg was already sitting there reloading. So when I look on a chart here and I see something, especially when I'm seeing like a big change in volume, like through here where this started at, that's a meta order. I think that we've got a meta, it might all be part of the same meta order. And it's kind of very consistent, by the way, with the way that up moves in the treasuries over the past 2 weeks have been happening too, isn't it? Though it does seem like that in this case, they just should have done that in the 5, huh? Because now what's happening is that the 5-year is the one that's leading the way. Like, it's steepening and the 5-year is leading. And because the 30-year is lagging a little bit, the 10-year yields aren't moving as much as if we had taken a trade in the 10-year. You say UB is lagging even more? Yeah, which is kind of funny because it's been the ZB side of the curve that has been like more active, but ever since that CPI print, it's been the opposite, hasn't it? I think that in ZB here, you're getting like a real regime change. Yeah, I don't have UB up. Man, if I had all of them up, like I could add TN, I could add UB, I could add the 2-year on here. Oh, what's enough? By refreshing the volume profile on the ladder and then resetting midline hard to see the spread on favored directional note. Easier for me to simply use Globex open with high-low levels. Yeah. You know what, though? Like, if so you can absolutely see spreads on the DOM, right? I mean, you can just see how this one moved more than this one since the last time that we moved it, right? But charting them out like makes a big difference, because now you can compare it to a previous move. Like, how much are we steepening compared to the CPI news day, right? So here we're looking at the 30 versus 5 and 30 versus, this one is 30 versus 5. And you can see they retraced the flattening that we had from yesterday, but there's still way more to go to retrace the flattening that we had from the CPI move. So this could be just a mean reversion trade on spreads, right? Although I kind of suspect, like, here's the thing. If we're saying, like, okay, in the whole argument has been inflation is transitory. And that CPI is kind of making people think maybe it's not so transitory, right? But that goes into the deeper issue of what is causing the inflation. Is it just supply chain issues and certain company behaviors that are hampering the supply chain, whatever? Or was it because of Biden's stimulus bill? Because the argument is very much being made in Washington right now that Biden's first stimulus bill has created this inflation. Okay, so if the inflation is being caused by fiscal and monetary policy, then shouldn't we expect, as long as that fiscal and monetary policy doesn't reverse, shouldn't we expect the inflation to continue? Yeah. And if that's the case, then we could be entering into a new long-term regime where inflation is a problem instead of deflation. Ergo, if that were the case, we would expect the curve to steepen, right? We would expect those 30-year yields to actually increase a little bit, or at least the 10 years. Yeah. But instead, on that CPI news, it flattened. It flattened because they say, well, maybe they have to raise rates in the short term, but in the long term, the economy is just going to be really slow. It's going to be like the Japanese economy, where it's just like you're always fighting inflation and rates can never rise. So that is still like the default. What is the word? That's still kind of like the default conclusion of the market, I think. But there's definitely a possibility for that to change, right? And when I see the aggressiveness with which they have steepened this morning, I start to wonder, right? Like I'm watching it, I'm being like, okay, so they're going to mean revert. If they mean revert, how far do they go? How aggressive is that? Do I really see people like do I see people like really getting hammered on it? I don't know. That's kind of weird to me that the 10-year is at many of these points has been the stronger driver. Because when that happens, I think that's much more likely like people placing bets. Even if you were to be believed, is it going to stay here for 2 years? Is it 5? Should we expect 10 years? I mean, sure enough, it goes away after that time. You can call it transitory. Meanwhile, price increases are permanent and forever such a nice deal. No, I think that if we are entering into a more inflationary, okay, let me put it this way. If it is not transitory, it will be something that lasts 10 years, yes. Because here's what's going to happen. We're going to get through this year. Christmas is going to come. We're going to have Christmas is probably going to be interesting because some people are going to have trouble getting the Christmas presents that they want, right? Okay. We're through all of that. February, March comes along. What happens February, March? Well, yeah, everybody does their end of year reviews and companies say, okay, based on how well you did last year, here's the increase that you're going to get. And they're going to say, well, we give you like the standard increase, and anybody that doesn't get their pay increased more than 5% is basically making less money now, right? So everybody's going to demand more because where the inflation is happening right now is really like it hits people in the pocketbook, right? It's things that actually matter to everyday Americans, like food is more expensive, all of these things, right? So I think there's a very high probability that in the beginning of next year that you're going to see inflation expectations anchoring higher because people are going to be asking for higher pay. And you're already seeing this with this whole thing where like people don't want to work. Companies are having a hard time hiring people and they're having to pay more. Like wages are going to increase, right? And that's kind of what starts the cycle. You make more, that creates more inflation. So then you have to increase your wages again. Well, and salaries never catch up. Salaries, maybe they never completely catch up to the inflationary prices, but they're still going to increase, right? And it's probably, we haven't seen any increases in a long, long time. A long, long time. So, again, if it's transitory, well, not so happy about that. If it's transitory, then hey, we get like one wage increase and then everything goes back to the way there was. But if it's not transitory, then the curve's going to have to steepen, I think. Right? Like and to try and anchor it more to like specific prices or market conditions that we could go for. Right now the market is pricing in 2 rate increases next year. So if they have to start going into 3 or 4 rate increases next year, then at that point, I think you say that this is going to have, the curve is going to have to steepen. Yeah, I heard constantly all week farmers complaining about costs and how they have to increase prices. Yeah. And the scary one with that one, live action, is that they have like contracts and stuff. So they have to keep the prices a certain price for a certain amount of time, and then when that's over, then they can re-anchor it, right? And so we here, regular everyday American, is sitting there thinking, well, it's not so bad yet, right? But the real increases haven't happened yet. So like a lot of people are going to be surprised by it. 5% inflation is bad. Yes, it is. And I think you really have to come back and look at Biden's stimulus and say, was it necessary? Was it? I mean, it seemed very necessary at the time because we were concerned about further waves and stuff. But now it sure seems like a bad idea, doesn't it? Okay, so the S&P 500, I was actually, are they selling off in Tesla again? President Biden says not 1, not 2, not 3, but 17 Nobel Prize winning economists say that passing Build Back Better will ease inflationary pressures and lower costs for American families. Yeah, that sort of argument doesn't convince me. You know what? I really didn't like that trade, but like the 30-year is coming back now. That might be coming out because of flight to safety risk. Yeah, that's a pretty serious downturn in the S&P 500. Like my thinking in equities was, I might as well, any kind of pullback. I think I was thinking, it's going to come down a little bit and then we can buy it because it was really bullish before the open. But now I'm realizing that's not that. It's a continuation of what we were getting earlier in the week, and maybe it's Tesla selling again. Any percentage of inflation? Well, that's not true, right? You have to have some inflation. Like, here's the thing. Some people benefit from inflation and some people don't, right? Who benefits from inflation the most? People with assets. Sure. Yeah. Okay, well, if you want people to own houses, then having a little bit of inflation is a great thing, right? Because you can buy a house, and then 10, 20 years from now, because of the inflation, and if your wages keep up, which of course they don't, but even then, the house will be a smaller percentage of your income over time. And that alone is enough of a reason to want to have a small amount of inflation. 2% per year. Because look at this market that we've had the past 10 years, since 2008, where we've hardly gotten any inflation, and we're always trying to goose things in order to get the inflation. That wasn't good for the middle class. That just made the rich even richer, because it just all went into stocks. And deflation is bad. Like having straight up deflation can spiral out of control. So it's way better that you have a target that is above zero. Now, the question is really, like to say any percentage, like if you want inflation to be zero, I would argue no. The real question is, should it be 1%, 2%, 3%? That's the real argument. Because the 2% target that they picked really is a little arbitrary. Well, I didn't get filled on that, which probably means it's not the best spot. News Squawk says NASDAQ has a video of a person tumbling down. Well, we're back to that 5.7 that I wanted earlier. Doesn't seem like such a great spot anymore, but Michael J. Berry, the S&P 500's nominal PE ratio is 26 and Schiller's CAPE is 39.23. Oops, I accidentally clicked something. Neither necessary nor sufficient, but S&P's PE was 18 before 2008 to 2009's 58% crash, 20 before 1929-1932's 80% crash, and 19 before 1973 and 1975's 48% crash. How? Earnings fell 91% in the 2008 to 9 and 73% in 29 to 32, etc. They did hit into it, but look, I don't know if that's a good trade. I don't know if that's a good trade. Man. So can you see how even my one lot, I don't know, you go back and rewatch that, even my one lot had an effect there, right? I hit into it. The rest of the limit orders, they're canceled, and somebody even hit into 1566. Hey, I actually got one first target. That's good. Big order that I was relying upon there did not hold up for me. Nope, that's bad. Okay, that's a little better. Still got 15 minutes to the consumer sentiment numbers. What? Latvia bans lawmakers who refuse the COVID-19 vaccine from voting on legislature and participating in parliamentary discussions. How can they pass a bill, an order like that? That is nuts. They're going to take away your representation if you don't get vaccinated now? What? Ugh. Live action says jolts. No. Oh yeah, you're right. Jolts at the top of the hour. I don't know. That number doesn't necessarily. We should expect that jolts will still. There will be a lot of job openings, right? There you are, Win. Oh man, it was the start of today's stream was so quiet. Win. I was like, "Where's Win?" I have nobody to talk to. Yeah, this is different. What we're getting here is different. S&P 500 is really chilled out, right? Manchin objects to tax credit for union-made electric vehicles. I kind of feel like that Congress doesn't need to give any more incentives for people to make electric vehicles. Don't you think? Is it just me? Well, now that was a little odd. The book seemed to react to those iceberg orders there really strongly for some reason. Do see the 6J has come back a little bit. And they take 19.5, big iceberg. 19 poles. Latvia appears to have a big issue with COVID and nobody agrees on vaccines there. Yeah. Still super weird, right? Although they're probably more concerned with the whole thing with Belarus right now, yeah. Iceberg at 16 in the 5-year. S&P 500 going for the lows again. No. It kind of looks like somebody's trying to flatten again. You can see it there. Wonder why Michael Burry decided to tweet at that time of day. Because I don't typically see him tweet in the early morning like that. It still kind of looks like some aggressive selling in the S&P 500, even though they haven't hit new lows again. There you go. The whole world is going to have a problem with COVID for the rest of the time. People need to accept this, back off of the authoritarian BS and focus on treatment. Well, yeah, listen, here's the thing that you're not seeing in the news that I think it needs to be said. The vaccine has not appeared to be as effective in preventing new cases as they wanted it to be. So, like, the whole idea of crushing the virus kind of rests on you having the ability to completely end it through a vaccine. But if the vaccine doesn't prevent transmission, doesn't really have good grief, the area of the country, where is it, Vermont, that has the highest vaccination rate right now also has like the highest case rate right now. Yeah. COVID zero, it failed. It just straight up failed. And so all this authoritarian stuff is just like pointless now. Yeah, you can't make the argument that once everyone is vaccinated, we can go back to normal, because the definition of fully vaccinated has already changed 4 times depending on where you live. Yeah, and I just don't see how it's like you get so many booster shots, it still doesn't end it, right? Yeah, here's what you'll notice, in my opinion. There's not a whole lot of people on television anymore presenting empirical evidence, is there? Talking about numbers, showing numbers, trying to help you understand how effective or not effective the vaccine is. Doesn't. You know why? Because they can't explain the current numbers. It's complete the opposite of what they wanted. So maybe it stops it there. Well, I wonder if they're going to stop me out on the E-mini trade before the numbers come out here or not. I also kind of wonder if this meta order change that we've had here was related to the news that's coming up, or if it was more a currency move. So, I mean, the 6J did come down there. They've been tracking the 6J pretty closely today. Could you imagine if there was a new pen? All right. That's one of the things that irks me the most, is what everybody was saying. Donald Trump was a dictator and is going to take away your freedoms and all these things. But every chance that he had where he really could have used the pandemic to seize more power for himself and so forth, and he didn't. Every opportunity where he had to do that sort of a thing, he didn't do it. And Biden, I feel, has been the exact opposite. Biden hasn't really had very many opportunities to do that, and yet it seems like they're trying to take they're still trying to do everything they can to increase their hold on power. I guess I can reset here. It's 3 minutes coming in here. So remember, inflation expectations preliminary for November previous was 4.8. They don't give an estimate on that, but I saw a heading the other week about Montana. I believe the Department of Health reporting their first flu case in a year. Yeah. Well, clearly our data collection is very flawed, right? I always saw one lot there at one spot 571, and I thought, oh, I might sell into that, but it's too close to the news. We'll see if the book lightens up for that. I mean, I don't think they typically do for this one. Judge in Rittenhouse case criticized following Asian food comments. What? Okay. What this comment doesn't seem like a big deal to me. Doesn't seem to be anything like prejudiced or inappropriate about what he said, but because he mentioned Asians, they're criticizing it because they said Asian food. Last year, the health people said the flu cases were down as a result of people masking up for COVID. What do you mean by what is your order book theory? I don't have a theory. I have a bunch of different models that have been shown to have some efficacy through empirical evidence over the course of 30 years, and I base my decisions off of that. Jeez. Okay, so the current conditions was 73.2 versus an estimated 80. Consumer expectations were 62 versus expected 70. Consumer sentiment 66 versus expected 72. So all of the sentiment numbers were less than expected. Jolts 10.4 versus an expected 10.3. Okay. Wow. I got lucky with the way that worked out. I mean, I probably would be in the money regardless, but when I put my order out there, I got filled at a way better price than I normally would have because somebody was hitting back the wrong way. So I've been chasing it here and haven't been able to catch it. Masking with the same mask is a problem experts are not addressing. Yeah, you know what? I agree with that. Of course, I haven't seen any evidence to suggest that that's really a problem, but I just don't see how you wear one mask all day and that's not like it doesn't create a health hazard. It's probably not a good thing for you. There should probably be some guidelines about what is the longest that you should wear a single mask, how often you should be changing them, and how washing them. I think there are some guidelines on washing them. They're not enough. I really wanted to take another contract on this, and did you see how I shouldn't have waited on a limit fill? I should have just marketed into it. At this point, I'm not sure it makes sense for me to try and do anything with it. We might wait for like a hole to form or something. Okay, so to review what we got going on here, we had the consumer sentiment numbers. They were not particularly good. The treasuries reacted with a flight to safety. The S&P 500 did not react strongly. We did create an area of low latent liquidity going all the way back up to 25. So we're falling back to where we were in the 130.22 area. Kind of makes you wonder what all of the selling in the 30 minutes or so before the news was about. What's the weirdest thing that you've seen in the book? Oh man, that's a tough one. Because I've seen so many bizarre things, man. every day there's something, huh? Every day there's something that shocks me. It feels like. I think though that some of the wildest things that we ever saw was back around the trade war stuff. Like there was some situations where we saw some really fishy behavior in the book, and then there was a big trade war announcement, especially when it was on the Chinese side. Like I guarantee you that some Chinese government officials tipped off their friends, and their friends were making like big bets in the markets. And since they're in China, they can get away with it, you know. Well, you might be able to get away with it even if you're on the US side, because it's not necessarily considered confidential information. Well, the S&P 500 is still being a little lackadaisical here. I do think that eventually they're going to break down lower, though. See, I never quite got to where I would get filled at 1.563. So, like, here again, I think I need to develop for myself a better idea, philosophy about when I should be aggressively adding or not, because I've had some situations where I really could have added, and I would have been happy with it. Elon Musk sold another block of company shares worth about 700 million. Filing showed on Friday. Yeah, so for you guys watching that Tesla thing, do you remember Almgren Chris? Right? So if you look at the number of transactions that he's putting through, he's not executing that, right? He is giving it to a bank, and the bank is doing it for them. So what are they going to do? They're going to execute half of it at the beginning. If they're going low risk, they're going to execute half of it at the beginning, and then, you know, it's like the amount that they do each day will go like this, right? So they do like half of it at the beginning, and then the next day it's going to be less, and it's going to be less, and it's going to be less. And the impact is going to be. So where we're at here on Friday, given that I think they are still selling, and it still seems to be having an effect since the NASDAQ is just getting hammered today, I think that there's probably still more to come. But over time, it's going to be less and less. Peter says JP Morgan is doing it for them. How do you know that it's JP Morgan? If you have a source that confirms that it was JP Morgan, I would love to know where that is, because I've been looking for that. Been looking for it. So if you have a source, then that's a source that I don't have and that I should be listening to on a regular basis, I think. You know? Okay, there is a pretty aggressive clear at 25 half. The offer there was being stubborn, so they just market ordered into it, and there was a little bit of spillover into 26. All three of these, by the way, up higher here, and I mean, I still am seeing the curve steepen a little bit, but because a lot of this move down has been driven by the 5-year. I think that that's really just what's going on. Is it's just the 5-year driving things. Nope. By the way, there is a monster order up at 21 3/4. That is a monster order. And, well, I would prefer to see the liquidity on the bid a little bit stronger. Like 24.5 is getting to 3,000. So this is not bad. I think we're beyond the point at which it would make sense for me to add. I'm probably going to regret saying that, huh? MMM breakup chatter? What is MMM? What stock is that? There's more talk of breakups in corporate America than a Taylor Swift album, News Squawk says. That is fucking hilarious, News Squawk. More talk of breakups in corporate America than a Taylor Swift album. Oh, I'm retweeting that one. That's so funny. Yeah, the alligators as well as are out today. Hmm. I think that in order for them, I mean, the 10-year is kind of looking like, yeah, we could go for more. And definitely with the way that the book is at this moment, I think that you could definitely see some trend continuing through just because there's not a whole lot put on the book here still. There is that 3,400 at 24.5. I'm a little concerned that if we tick down that will pull. That could be 217. Wow, that's most of that is one order. Wow. So when I get to see a big order kind of trying to hold things up, I start to get a little suspicious because sometimes we've had these where they try and push it up and they're just trying to get fills, right? But that huge order in the 5-year has really caught my interest. Like that's a really big target. Like somebody's got to be gunning for it to go up there. I don't know how long that's been up there for. Okay, so they did. There you see, they took 24.5 and there wasn't 3K there. It's like some I wouldn't say aggressive selling, but the book is just not holding the orders there as it falls back into the hole of sorts. Well, Seth, you could try and add here. I don't know if I want that anymore, to be honest. It was in a Bloomberg article about his brother selling 8,500 shares. Well, if it was his brother, then maybe they are. Matt Ranger, a new blog post on singlecurrentlunch.com. How badly is cryptocurrency worsening the chip shortage? Answer is a lot. Well, cool. So I have a reason to be mad at them, huh? I had no idea that Elon had a brother whose name is Kimball. Of course he does, right? Okay, this one is funny. CNN's Don Lemon, your right is trying to say people have a right to defend your town, your street, and your country. Imagine if every single person in America did that. Yeah, I think that's exactly what the right wants. Not that I'm saying it would be a good thing, but I don't think that that's a very convincing argument against anybody on the right. Oh, did they stop me out of my short in the E-mini? Sucks. Maybe the S&P 500 is saying, well, since rates came back down a little bit, maybe things aren't so bad. Okay, I need to stay focused here. They came back above where the big order was when they had come down the other way. The volume that's trading through is okay. The book seems to have recovered, at least on the bid side. I would like to see those bids holding. I'd like to see those bids holding in the face of volume, like 1632. That's not bad, but the spreads are all still kind of even, if not steepening from the 5-year. U.S. dollar dips after drop in consumer sentiment. Yeah, so there may be that the biggest driver that we'll get here is just the Japanese yen driving us up as the dollar falls because of the bad consumer sentiment. And as the dollar falls, that's good for stocks, right? Wait, what? Okay, let's read this. Open image in new tab. The moods of consumers play a central role in how information is processed. See my book, Consumer Expectations. Positive moods promote more casual and less detailed information processing, and negative moods promote more formal and deliberate information processing, especially of potentially negative developments. That's definitely true. I definitely fall into that all the time. Partisans aligned with the president's party have adopted a very positive moods, and those in the opposing camp very negative moods. As a result, partisan supporters of one or the other presidents either mentioned or ignored rising home and stock values, inflation, and income growth rates, or mentioned or ignored employment or unemployment rates, and so forth. The partisan differences in perceptions were not minor, but were large and equal in size. They were larger than the differences across income, age, and education. Moreover, those partisan differences nearly equaled the entire span between cyclical peaks and troughs. The issues underlying the stark partisan divisions are based on stark differences in economic policies. The stylized difference is that one side favors maximizing economic growth and efficiency, and the other side on maximizing distributional equity and fairness. Such legislative challenges are won or lost by extreme partisan support drawn from both sides of the aisle. Such extremes, however, make achieving their policy goals much more important than providing effective countermeasures to ongoing economic hardships. So the headline that I was seeing that made me read that was the University of Michigan Consumer Sentiment Survey might be completely broken according to the survey itself. Well, that's not what they said, but I do kind of feel like that would make the survey less effective, huh? But I also think you'll see a change in that. Like, the thing is there's a certain point at which you can't deny reality anymore, right? So at what point is inflation such a persistent problem that like everybody has to accept it, right? Well, I think that was this week, right? Because the president was like, this is a problem. Now all of his supporters are gonna be like, oh, okay, this is a problem. But you can see how they're doing everything to say, but it's not because of our government spending. I'm thinking out loud, if you post economic reports would help reviews of your archive videos, adding key reports. What do you mean by that? I mean, I always will read about the economic reports. What would you define as me posting economic reports? What the heck? What the? News Squawk tweets, Americans, British people all sound posh and drink tea all day. Brits. And then there's a headline, junk in the trunk. Brits shoving beer bottles and toothbrushes in their butts cost the National Health Service $350,000 every year. I don't know, 350,000 at a national level is actually pretty mild, but still, what the heck? No, when reviewing your videos, it would help out the market. Yeah, well, I mean, that's how I do. Remember that was that one week where I had the time, and so I was doing like a daily synopsis, right? I did that. And at the beginning of my videos, I try to talk about what was the move that we had yesterday and overnight, and what was the news behind it, right? Because what we're trying to sort out is, when we have a move, is it because of fundamental information or because of liquidity concerns, essentially? Like, I those are the two broad categories I would put it in, right? Because what can happen is, if I have a move that's based largely on liquidity concerns and it's contrary to the informational edges that we have, then those could be opportunities to fade and get good positions, right? A friend of mine is an NHS ED doctor, and he has some great stories of things like that. Imagine having to go to the emergency room and I'm explaining to the receptionist why you need to see the doctor. Well, I'm pretty sure that a lot of that happens in the US too, right? And yeah, I'm sure it is awkward, some of the things that people have to explain. I mean, I don't know. I feel like anytime that you end up in the emergency room, it's probably a little embarrassing, huh? Okay, well, I just want to know, I still want to see them come up to like 25 half and some stacking at 24 half come back again. But for now, it looks like they kind of fell into the hole, but that the liquidity is firming up around it now. A lot of people will claim they fell on. How do you? Good grief. I could see how you could maybe say that with a beer bottle, but with a toothbrush? What? Okay, here is Michael J. Burry again. Elon Musk, I hope they're able to achieve high production and break-even cash flow. That is the true test. There have been hundreds of automotive startups, both electric and combustion, but Tesla is the only American car maker to reach high volume production and positive cash flow in the past 100 years. Then Michael Burry responds to him, no, Elon, the true test is achieving that without massive government and electricity subsidies on the backs of taxpayers who don't own your cars. Oh, snap. Oh, snap. You go, Michael J. Burry. I is 100% right. Where would Tesla be without the unprecedented government support that they have gotten? All of these, because frankly, that first... they might not even be in the S&P 500 today if it wasn't for the government subsidies that they get from the EU. Oh man, that is going to be the story today. We now have, my folks, you're my folks, the Twitter battle, the market Twitter battle of the century. Michael J. Burry versus Elon Musk. Let's go. I am so hype right now. I am on Team Burry all the way on this one, man. All the way. Elon, you can't come in and brag about how you have, high production and break-even cash flow when the government is basically supporting your company. Live Action says, so ES long again? I don't know, maybe. You know what? So this flow that we're seeing here in the Treasury, I still think that it's going to be very much dollar driven. The dollar did pull back a little bit there. You can see, right? I think that the S&P 500 is happy about the rates coming back a little bit. Yeah. So could be. We're still not. Or no. It might be a while before the treasuries decide to make another move, and they could just balance out up here. I don't know. I hope when I was reading that whole thing that I didn't get too loud for you guys. So was the volume okay when I got excited there about Michael J. Burry and Elon Musk going at it? I'm gonna retweet that. Retweet with comment. Of course, what are the Elon Musk fanboys are going to say that, of course, Michael J. Burry is salty about it because he lost money shorting Tesla, right? We could see a lot of throwing up if we go to the bottom. Well, they did kind of come back there, didn't they? And the treasuries come back a little bit there too. That move, in fact, was more steepening. It's kind of funny because the weak consumer sentiment doesn't necessarily suggest steepening, but it is like, if we're going to retrace some of Wednesday's move, then we're going to retrace some of the spread too, is what I think is going on here. Oh, I see. Talking about Taylor Swift is the hot thing today because she is re-releasing some of her older stuff on a new label. Well, I tell you what, you got a good, if you went short the 30-year off of that, you got a good move, huh? Because they gave up a ton there. And the 5-year is still kind of pushing, although maybe they get dragged down with it a little bit. Yeah, they are getting dragged down a little bit. So we'll see. Not so confident on the adding to the trade now, are we, huh? Can you elaborate on execution and liquidity vacuums? So the more liquidity there is at a price, the harder it is to get through that price. Now, a mistake that you might make is assuming that the amount of liquidity that you see placed on the DOM at this very moment, that is like liquidity. But there is resting liquidity and there is latent liquidity. Latent liquidity is like you trade through that and then it ticks back up and you'll see more added there. So there's a certain amount of people that are willing to provide liquidity at that location, right? Well, if you go to that spot and like big transactions happen, then basically those people that are willing to provide liquidity at that location, they've provided the liquidity. The volume has happened. So they're not going to continue providing liquidity in that location, right? Which means that in that spot, you get a spot of low latent liquidity. So when you have a spot of low latent liquidity, it's a lot easier to move through that spot than it is to move through the spots above and below it. And so it kind of constrains price. So that's what we're talking about when we get a liquidity vacuum. So when we had this big move up after the news, you should expect it to come back at least a little bit because there isn't going to be a lot of latent liquidity behind where the move happened. And so that's why you may often see a news move completely retrace and then go higher. Retrace, go back to the scene of the crime, and then bounce again and go higher because it's a liquidity aberration. This has been one tricky day. It's been a busy day, hasn't it? But over here in the Treasury, for us in the 10-year, it's been tough. Because really what should have happened is I should have gone short the 5-year. I should have gone short the 5-year. Now it's too late. Now, if I want to go short something, I probably better be doing it in the 30. Actually, why not? Let's pull it up here and see. Okay, I gotta pull it over there. I'll arm it just in case I see something that makes me really think that the 30-year is not going to continue, and it's gonna. If I do feel that, though, I think I'd probably rather have it over here. Okay, President, we can lower costs for working families and make it easier to get back to work at the same time. Build Back Better is designed to make healthcare, childcare, and elder care cheaper and better so working families can breathe a sigh of relief. So I think that the Biden administration is very concerned right now that they are not going to get their bill passed because of this inflation. And they are doing everything that they can to try and convince people that we should still pass the Build Back Better Act. But I don't think that Manchin is going to move on that. Okay. We're still kind of getting this steepener. Array actually got green a little bit. I wish that, you know what I should have done on this is I should have taken a profit at $20, and then if I really still felt like it was going to go higher, I could take another contract here, because I do think that we could move back up to highs, but I don't believe enough in that to want to take 2 contracts on it. Oh man. That was a little disappointing right there. And did the 6J fall with it? Yes, the 6J fell with it. Maybe a reprieve there. A big order at 23.5. They've been doing as of late. Let's watch this. As of late, them big orders like that have been a good indication that like they're gonna accumulate here, and then this is gonna pull and they're gonna go higher. Let's see. They tick up. Does it pull 23.5? It kind of is. It kind of looks like if they were to trade through 23, that the 23.5 would completely pull. But latent liquidity can also push price lower, stay there, and not retrace. What do you? Here's the thing is that you can't see the latent liquidity, really, can you? Like, that's the problem with it. It's not the resting liquidity. You don't see it until after it's traded there for a long time, right? But the tendency of latent liquidity is that if you trade in an area, that it will create a little bit of a vacuum. What makes a liquidity vacuum a liquidity vacuum? A low latent liquidity in the area. So just remember, large transactions can create liquidity vacuums. It's as simple as that. Large transactions and quick moves can create liquidity vacuums. right? Or think about it from the market maker's perspective. If you're a market maker, you're taking orders at every price. What are things that could cause you to not want to take orders anymore? One, you've already taken on too much inventory, right? Or two, there was like a quick move, right? The price moves up 8 ticks, all of a sudden you're gonna be like, oh, well, I don't necessarily want to provide liquidity anymore, right? Still got 20 minutes left here, but the treasuries are being so active. So they didn't decide to take 24, but I can see that like when 23 half goes offer that some's a little bit stacks there at 24. So you can see it happening right here at 23 half, low, an area of apparently low latent liquidity. I missed my chance. What the micros did there did not match up with what the main treasuries were doing. Well, I'm getting iceberging across the board. All three tick down through the iceberg, tick back up. Yeah. Well, I really should have taken more profits on that last trade. But it's just being a tough day. Yeah, it's really hard. So a lot of it is just luck sometimes, I guess. But I mean, there was reasons that I could have thought, oh, I should take some profits here. But I really didn't think it was going to come that far back. So I don't know. I could still try taking another one. But given the time frame and everything, I don't necessarily want to be entering into a position at 11 o'clock on a Friday, right? So I think they will just, I do end up taking a small loss off of that, but that's okay. See there, I would have lost everything if I was getting out now. It's been a real roller coaster this morning, hasn't it? Now on ES, I'm kind of, do you think that the ES is going to reverse, or do you think it's just going to chop down there? Because I'm kind of sitting here thinking, yeah, they might just chop around here. Okay, so the 10-year is retracing this now. They're gonna go all the way back down to where they were, huh? Well, I think I could say that even though the news that we got this morning was dovish, and there's like some mean reversion going on and everything, there's also some reasons to think that rates still want to go higher, because the larger picture, the larger trend is still higher rates. Boom, 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 boom. Yeah. Very interesting. It's pretty unusual to see this much activity this late on a Friday. 10 and 5-year also corn easiest today for me. Yeah. You know, if I had really taken my trade in the 5-year, I would have been so much happier with my results, huh? So I'm thinking that the things that I probably need to focus on at the moment, I do think that I still need to do a little bit better about taking profits, because I still have a tendency to just really try and let them ride, which was okay for a while, but now I think the volatility may be dying down a little bit and I won't be able to do that anymore. But then if you're on the right side of the spread, that makes such a difference. It's a lot easier. And another thing I should note is that even though we've definitely seen some spots in liquidity, like for instance, we identified something pretty good around, what was it, 23 or so, I think it was. But it seems like that in the end, the market orders have been more influential, and these sell market orders really took over the market. Which is a really interesting change from the beginning of the session, where it just seemed like there was icebergs everywhere and they were holding it and pushing it up. Could that be because they had already hit their targets and levels and stuff? I don't know. I mean, like value area high in ZB we touched. Yeah, we did it in all three of them, really. So now maybe they want to touch value area low. Oh, you think I should at least look at corn? Yeah, corn wouldn't be a bad place to go. But again, the problem there is just that, like, then I got to become an expert at corn, right? It would take me years to get up to speed with corn to the same level that I am with the Federal Reserve. And you're not going to have as many news catalysts to trade off of with corn, right? With corn, probably we would have to rely more on the liquidity. Where can I read about liquidity vacuums? Jean-Philippe Beauchaud's Markets Under the Microscope. So did corn, like, what are they? Let's see here. ZC, they're only up 0.5%. The 2-year yield is down 5% today. Oh, so I should have been trading it over. No, actually, maybe not. 2% isn't that many ticks, unfortunately. Well, Treasury is kind of hinting that maybe that was far enough. What do you think? Do you think that they will go higher into the close? No, I can't say that. The market volume has been so short. Nah, I think for me, it's best to sit on my hands because I had a good trade. I didn't get as much out of it as I probably should have. There's not going to be as many opportunities. I'm not going to get a trade, but I'm very unlikely to get a trade that was as good as that one off of the news, right? What is that market impact with timescale liquidity? That's not the name of the book. Oh, that is a scholarly article. No, we're talking about a book. Markets Under the Microscope. Trades, Quotes, and Prices, Financial Markets Under the Microscope, first edition by Jean-Philippe Beauchaud, author. He also wrote a book on financial risk and derivative pricing. Oh, he also wrote a book, A First Course in Random Matrix Theory for Physicists, Engineers, and Data Scientists. Market Microstructure, Confronting Many Viewpoints. Hey, I didn't know that was the thing. I didn't read that one. You made another book about market microstructure? Based on the December 2010 conference on market microstructure organized with the help of Institute Louis Bachelier, this guide brings together the leading thinkers to discuss the important field of modern finance that provides readers with vital insight on the origin of well-known anomalous stylized facts in financial price series, namely heavy tails, volatility, and clustering, and illustrates their impact on the organization of markets, execution costs, price impact, organization, liquidity in electronic markets, and other issues raised by high-frequency trading. World-class contributors cover topics including analysis of high-frequency data, statistics of high-frequency data, market impact, and optimal trading. This is a must-have guide for practitioners. I think that you'll probably still want to go with Trades, Quotes, and Prices, Markets Under the Microscope. Now, this other guy, where was his name? This Bachelier guy. I think that he's more of like a textbook compiler kind of a guy. Theory of speculation, the origins of modern finance. How he's French. That would make sense because Jean-Philippe is French. Oh, I see. No. This other one. With the help of the Institut Louis Bachelier. Oh, I see. There's a school somewhere. I should have known because I knew this guy. This guy, he did stuff with math a long time ago. Yeah, okay. Well, coming back over here, if I had stayed in a trade, would I be happy? No. Be about the same. It did reverse a little bit, though. Got about 5 minutes. Oh, that's right. I'm not working today. But what I'm going to do is I'm going to go and take some more medication, and I'm going to write, and then I'm going to record the video for you guys here on the chalkboard behind us. Should be fun. Oh, that's a good... I don't know. If you go to a coding camp, what sort of codes does one learn? Which code would you... No. Well... Okay. So you're kind of asking two questions. If you go to a coding camp, you probably just go to the coding camp that is closest to you, and they teach what they teach. Because here's the thing. Once you've learned how to code, switching between different languages is not a huge deal. You know, I can start programming in practically any language. Okay. But if you're going to specialize in a language and become an expert on it, and your goal is to make money, probably the best thing for you to do right now is still JavaScript. Now, JavaScript is an absolutely terrible beginner language because it's weird. There's so many things about it that are different from other languages and are probably bad habits and things like that. But but that's where the money is. There's so many people making websites completely with JavaScript and Node. So if you know how to do JavaScript with the React framework, then you're going to make money. You're going to be making six figures. Unless, it's a really low income area. Hey, Big Toasty. How are you? Where have you been all day? JavaScript. No, Java and JavaScript are completely different. That's one of the things that surprised me the most when I first really started learning about programming. The Java is a language made by it's owned by Oracle now, right? I think Oracle owns it, and it has a virtual machine in it. JavaScript is a scripting language that runs in your web browser and is how you make dynamic stuff happen in the web browser. But what happened was they took JavaScript and they said, what if we made a version of JavaScript that instead of it running in the web browser, it would just run on your computer backend. Then I could write my backend in JavaScript too. And so that's what they did, and that's called Node. And then so many people were coding with JavaScript and Node that it just kind of became a big thing, even though it's probably like the least effective way of doing that sort of a thing. And like I said, it's a weird language and it's not a bad, it teaches you bad habits. But like, again, if you're a React developer, you're going to make six figures and you're going to have jobs because that's just like the most in-demand area right now. Well, they're still at 1.57. I'm okay with it. And because of the time of day, I'm okay with it. But if maybe they go back up to the highs, I don't know. If they go back up to the highs, I'm just going to be like, it's okay. But if they had gotten back up to the highs by now, then I would have been pissed, right? Because a part of my calculus that I'm doing in here is that I don't want to be trading past 9 o'clock. Now, that said, I'm still not so sure. This still kind of looks to me like it is just evening out, that they may just kind of go back and forth at 23. MongoDB now I am not familiar with express.js. What is that? Express.js is a minimal and flexible Node.js web application framework that provides a robust set of features for web and mobile applications. Oh, I see. So Express.js is a framework to make the backend a little bit better for you, because there's all sorts of really annoying stuff where in Node you're always writing this template code. Yeah. That's one of the things that I hate about Node, is that like there's always, to get anything working, there's like this minimal amount of stuff that you have to do in Node. And every tutorial that I ever looked at, they were always doing it slightly different, you know? And when you were beginning out, it was really hard to know, like, what were the differences between them and which one should you use and whatnot. Couldn't make those decisions. Now, MongoDB, I've used that heavy. But the problem I have with Mongo, not that I'm saying that there's something wrong with MongoDB, but where my experience I think is lacking is that I think the reason that people want to use MongoDB these days is because it makes sharding easy. And I don't have a lot of experience dealing with the sharding. I've been to a number of talks and stuff where they were talking about MongoDB and sharding and stuff. And when they really start to dig into that stuff, it gets effing confusing. Nice pop on ES. Yeah, back up to the open and above. Guess I was wrong on that one. I said, I think maybe they'll just chop, right? I was saying, well, it looks like they're reversing, but they're probably likely to chop in here, so I don't want to get involved. But I probably should have taken a long. But React is the one that is really like they're looking for people, right? Like if you go and search for React jobs, you're going to find a lot of job postings. But that's the thing. If you want to do it for the money and everything, then that's what you want. That's probably what you want to do. If you wanted to do it for like, I want to develop web applications and I want to do it right, then probably you should do Golang, right? Maybe you still use React for the front end, but I would do my back end in Golang. Now, on the other side, if you're programming and you just want it to be easy, you just want things to be easy, use C#, and that's what I use. C# is an easy language to deal with. I saw this funny video the other day where it was like the Squid Games for programmers, and you have to write a program that will output hello world, but you don't get to use any template or anything like that. So there's always this little bit of code that you'd have to put in to make like a working actual program, right? And in C++, that's like, kind of complicated. And if you make even a teeny tiny little mistake, you forget this one little odd aberration that has to be in there, then it doesn't work. And in that one, in the Squid Games, if it outputs an error for any reason, then you die. And only the Python and the C# developers made it through that round. Your app will be as good as your worst developer in your team, no matter what language you use. It's not so simple. So here's why I would use Golang as opposed to Node. Here's where the issue is. JavaScript is has a really strange relationship with concurrency. So they have a lot of interesting and difficult for me to explain structures about promises that kind of deal with when things happen. Okay. So you can come in and you can say, put a promise out there that you're going to do this thing, but then I can continue to do other stuff while I'm waiting for that thing to complete, because you're like waiting on a web call to come back, right? And this is like really, really common in a web application, right? Is you send a request out to an external application and you have to wait for it to come back, right? So dealing with that in Node is a little weird, because there's some oddities around how promises and the other asynchronous structures that they have that can be confusing, and you really have to know what you're doing, basically, right? And that's where you get into the difference between like a JavaScript programmer and a really experienced good JavaScript programmer, is they've done that a bunch of times and they understand all of those nuances and stuff. Okay. Golang, on the other hand, was developed from the ground up to handle these sorts of concurrency issues for you very easily. So yeah, they both have structures to do it, but if you do it in Golang, you can be a lot more confident that you're doing it right. So if you have a team that you got a bunch of Go developers versus a bunch of Node developers, and you have a highly distributed web application with a lot of concurrency in it, you're probably more likely to have less problems with that in Golang than you would in JavaScript. When you do it in JavaScript, you're going to find at some point that there's some bottleneck in your program that you didn't realize. So that's why I say, if you want to do it right, I feel like the best way to do it right now is in Golang. But JavaScript is so far developed that it's probably more in your favor to learn that. Now, on the other side, if you want to do machine learning, then you do Python, right? It all depends on what you want to do. But people like to argue about languages forever. You have to deal with the concurrency of it's always going to come up, man. It always ends up coming up, I'm telling you. You know, React is a really good example, because React is probably not enough. So what was the other language that we were using? There was another framework that I was using to deal with actions, because man, when you really get a complicated React application, there's all this stuff where you have to manage the state of everything, right? You have to say, okay, here I click this button, and then when I click this button, then it's submitted, so you can't click it anymore. And when you have to have like 5 interactions like that for every little control that you have on the screen, and that's really tends to be like the way that it goes, it becomes unruly so quickly. And so they've developed other frameworks for you to manage the state. I forget what the name of it was, but there's this framework where the state of everything can be put into one big JSON document. And it goes, when you do something, it goes into, you pass that big document into this transform and the function that you're going to do, and then it changes that document. And that way you have a history of every state that the application was ever in, and you can go back and stuff. Yeah, it gets, yeah, it was Redux. That's right. Yep, it was Redux is what we were using. But that's just where I'm getting into. Like, I would rather write a web application in Go. I mean, there's a reason why Google decided to make it, right? Because they could have done everything in Node, right? But they understood that JavaScript was not built from the ground up to do this. It was really kind of hacked into doing it, and it was better to make a new framework to do it with. And I think that the language that they made is very well suited to making web applications. It doesn't seem like it because of the kind of language that it is, but Golang is really well suited to making web apps. And when you get to these big, like Rakuten, I spoke with them, but they were looking for something that was like way above my level. They really wanted like a manager kind of guy. But they use Golang, so they need it to be fast, right? I don't think that anybody here is really like thinking about becoming a coder, but I tell you what, the other path that you can take is you can go and be on like the systems design kind of side of it. And if you understand how to use Terraform, or you know how to use Kubernetes, oh man, I think that is probably easier stuff to get started on with than learning how to program, and those make a lot of money too. Anyways, I'm past my time. They come back up there. You see that the 30 years is still just like really bearish. So I think that we're just getting some really, really strong spreads, and we're kind of getting stretched out in the middle, because I think that staying up there at the highs was probably the right thing overall, if not for the spreads. So I didn't anticipate that. I think I need to understand them. It's been a long time since I've seen spreads move this hard and this aggressively, and I'm having a hard time adjusting to it, I guess. But I am going to need to go through and do some more study about tendencies, empirical tendencies in spreads. I know that they exist. There's models, but I don't know enough yet to really be able to use it in my trading. But hey, with the way that they're trading now, you think we'll still have a volatile week next week? It could be. We'll see. In the meantime, let's set the title for today. Consumer sentiment disappoints. In Rollercoaster. I feel like it was a roller coaster day. We were all over the place. Okay, guys. I will see you on Monday. Hopefully I have a good video for you then. In the meantime, stay profitable, friends.